You see the swoosh everywhere, on your shoes, on your shirt, on billboards, stadiums, and championship trophies. It's the most recognizable logo on earth. Nike, the Greek goddess of victory, the symbol of athletic achievement, the brand that tells you to just do it. But here's what Nike doesn't advertise. They're one of the most sophisticated tax avoiders in corporate history. Not tax evaders, that's illegal. Tax avoiders. They use a maze of shell companies, offshore subsidiaries, and legal loopholes to hide billions of dollars from the IRS. We're talking $12 billion parked in tax havens. Money that should be taxed in America but isn't. Money that could fund schools, hospitals, infrastructure. Instead, it's sitting in Bermuda, in the Netherlands, in Ireland, in places where Nike has no factories, no employees, no physical presence whatsoever. And the craziest part, it's completely legal. This is the story of how Nike built an empire, not just on shoes and marketing, but on one of the most aggressive tax avoidance schemes in modern capitalism. From the double Irish-Dutch sandwich to phantom intellectual property transfers, we're about to expose the playbook that lets billion-dollar corporations pay less in taxes than a middle-class teacher. Because when you see the swoosh, you're not just looking at a logo, you're looking at a monument to legalized theft. Let's start with the basics. Nike is massive, $51 billion in annual revenue, market cap over $200 billion. They dominate global sportswear with a 40% market share. They own Jordan Brand, Converse, and a dozen other subsidiaries. They sponsor the greatest athletes on earth: LeBron James, Cristiano Ronaldo, Serena Williams. They pay universities millions to outfit their team. They are sports. But here's the thing about Nike. They don't actually make shoes. Nike is not a manufacturing company. They're a design and marketing company. Almost all of their products are made by contract factories in Asia, Vietnam, China, Indonesia. Nike designs the shoes in Oregon, brands them with the swoosh, and then outsources production to third-party factories that do the actual work for pennies on the dollar. This model has two advantages. First, it keeps costs low. Second, and this is where it gets interesting, it allows Nike to manipulate where their profits appear on paper. Because if Nike doesn't manufacture the shoes, and they don't sell them directly in most countries, then where does the profit actually come from? According to Nike's accounting, the profit comes from intellectual property. The brand, the logo, the designs, and intellectual property can be moved anywhere, even to places where taxes don't exist. Here's where Nike's tax strategy gets diabolical. It's called the double Irish-Dutch sandwich, and it's one of the most famous corporate tax schemes ever invented. Apple used it, Google used it, Microsoft used it, and Nike perfected it. Here's how it works. Follow closely, because this is financial engineering at its most cynical. Step 1. Nike creates a subsidiary in Ireland. Let's call it Nike International. This Irish company officially owns Nike's intellectual property for all markets outside North America. The swoosh logo, the designs, the trademarks, everything. Step 2. Nike International licenses this intellectual property to another Irish subsidiary. Let's call it Nike Operations. This company is also registered in Ireland, but here's the trick. It's tax resident in Bermuda. That means it pays Irish taxes on 0% of its income, because Ireland only taxes companies based on where they're managed and controlled, not where they're registered. Step 3. Nike Operations licenses the intellectual property to a Dutch subsidiary. This is the Dutch part of the sandwich. The Netherlands has tax treaties with almost every country on earth, which allows royalty payments to flow through without being taxed. The Dutch company exists purely as a conduit, a legal pipe that money flows through on its way to Bermuda. Step 4. Every time Nike sells a pair of shoes in Europe, Asia, or anywhere outside the US, the profits are funneled through this structure. The money goes from the local Nike store to the Dutch company as a royalty payment for using the swoosh. Then it flows from the Netherlands to the Irish subsidiary, and then it disappears into Bermuda, where the corporate tax rate is 0. The result? Billions of dollars in profit, legally hidden from taxation. Not stolen, not illegal, just moved, surgically, strategically, ruthlessly. Bermuda is a tropical island paradise. Beaches, resorts, crystal blue water, and one other thing: no corporate income tax. 0. Bermuda doesn't tax corporate profits, doesn't tax capital gains, doesn't tax dividends. It's a black hole for money. You put cash in, and it never comes out. Nike has billions of dollars sitting in Bermuda, not invested in factories, not creating jobs, just sitting there, accumulating, compounding, waiting. But here's the absurdity. Nike doesn't have a single employee in Bermuda. They don't manufacture anything there. They don't design anything there. They don't sell anything there. The entire Bermudian operation is a mailbox, a piece of paper, a legal fiction. And yet, according to Nike's financial statements, a massive percentage of their international profits are earned in Bermuda. How does that work? How do you earn profit in a place where you do nothing? The answer is intellectual property. Nike claims that the value of their brand, the swoosh, the designs, the marketing, is so valuable that it generates profit even when sitting in a filing cabinet on a Caribbean island. It's not about economic reality, it's about legal structure. And the IRS can't do anything about it, because technically it's not illegal.
Here's the part that should make you furious. Nike is an American company, founded in Oregon, headquartered in Oregon. Their CEO lives in America. Their designers work in America. Their greatest sponsorships are American athletes wearing American jerseys.
But Nike pays almost no US taxes on their international profits. In fact, between 2008 and 2020, Nike reported over $40 billion in foreign earnings, and they paid an effective foreign tax rate of less than 3%. 3%. Compare that to the US corporate tax rate of 21%. If Nike had paid US taxes on those foreign profits, they would have owed over $8 billion. Instead, they paid a few $100 million and called it a day. Where did the rest go? Bermuda, Ireland, the Netherlands, tax havens that exist solely to help corporations avoid paying their fair share. But here's the real tragedy. The burden doesn't disappear, it just shifts. When Nike doesn't pay taxes, someone else has to. Small businesses that can't afford offshore structures pay full rates. A family-owned restaurant in Ohio pays 35% while Nike pays 3%. Middle-class workers pay full income tax on every dollar they earn, while Nike's billions sit untaxed in the Caribbean. Schools lose funding, teachers buy classroom supplies out of pocket. Infrastructure crumbles, bridges collapse, roads deteriorate, water systems fail, public services are cut. Let me put it in perspective. Nike avoided roughly $8 billion in taxes over 12 years. That's enough money to pay the annual salaries of 160,000 public school teachers, or to repair 20,000 miles of roads, or to provide healthcare for 2 million low-income families. But instead, that money is sitting in a Bermuda bank account, doing nothing except enriching shareholders who are already wealthy beyond measure. And meanwhile, Nike sponsors a new stadium, pays LeBron $100 million, runs Super Bowl ads, telling you to just do it. The hypocrisy is staggering. So why doesn't the government stop this? Why are these loopholes allowed to exist? The answer is lobbying. Nike spends millions of dollars every year lobbying Congress to keep the tax code exactly as it is. They donate to politicians on both sides of the aisle. They fund think tanks that publish reports defending corporate tax avoidance as good for the economy. They hire former IRS officials and Treasury Department lawyers to design even more sophisticated schemes. And it works. In 2017, the Trump administration passed the Tax Cuts and Jobs Act, which was supposed to close offshore loopholes. Instead, it created new ones. The bill included a provision that allowed companies to repatriate foreign profits at a reduced tax rate, essentially rewarding them for hiding money overseas in the first place. Nike took full advantage. They brought back billions from Bermuda and paid a fraction of what they should have owed, and then they went right back to using the same offshore structures. Because the system isn't broken, it's working exactly as designed, it's just not designed for you. Nike isn't alone. Apple has over $200 billion offshore. Microsoft has over $140 billion. Google, Amazon, Facebook, they all use variations of the same scheme. Together, American corporations hold an estimated $3 trillion in offshore tax havens. $3 trillion. That's not a typo. That's more than the GDP of most countries. That's enough money to rebuild America's infrastructure 10 times over, to fund universal healthcare, to eliminate student debt, to solve homelessness. But instead, it sits in Bermuda, in the Cayman Islands, in Luxembourg, in places where it does nothing except accumulate and compound for shareholders. And the problem isn't just American. European countries lose billions to the same schemes. Developing nations lose even more money that could fund hospitals, schools, clean water. Instead, it flows to tax havens, siphoned off by multinational corporations that exploit legal loopholes with surgical precision. Nike's tax strategy isn't just an American problem, it's a global crisis, and it's getting worse. Here's the question that haunts this entire story. Is it ethical to avoid taxes just because it's legal? Nike would argue yes. They follow the law, they file their returns, they pay what they're legally required to pay. They're not breaking any rules, they're just playing the game better than everyone else. But here's the counter-argument. Legality isn't morality. Slavery was legal. Segregation was legal. Just because something is allowed doesn't mean it's right. When Nike uses offshore structures to avoid billions in taxes, they're not breaking the law, but they're breaking the social contract. They're benefiting from American infrastructure, roads, ports, legal systems, educated workers, and then refusing to contribute their fair share to maintain those systems. It's a form of parasitism. They take the benefits of society and externalize the costs. And when called out, they hide behind lawyers and accountants who insist it's all perfectly legal. But legality is just a shield. It doesn't make the behavior ethical, it doesn't make it fair, and it doesn't make it sustainable. Because at some point, the system collapses. When too many corporations avoid taxes, governments can't fund basic services. When governments can't fund services, social stability erodes. When social stability erodes, revolutions happen. And no amount of offshore money will protect you when the social contract is broken. So what happens next? Are we doomed to watch corporations siphon wealth into tax havens forever? Or is there hope for reform? There are glimmers of change. In 2021, over 130 countries agreed to a global minimum corporate tax rate of 15%. The idea is simple. If every country agrees to a minimum tax, companies can't play countries against each other. They can't threaten to move to Ireland if the US raises rates. The race to the bottom stops. But there's a catch. Enforcement. Who's going to make sure countries actually follow through? Who's going to stop tax havens like Bermuda and the Cayman Islands from ignoring the agreement? And what happens when corporations find new loopholes? Because they will. The truth is, tax avoidance is a cat and mouse game. Governments close one loophole, corporations find another. And as long as the incentive exists, as long as companies can save billions by exploiting the system, they will. The only real solution is political will, public outrage, transparency, because these schemes only work in the shadows. When people understand how Nike hides $12 billion while teachers pay full income tax, they get angry, and angry people demand change. But change requires pressure. It requires accountability. It requires people to stop buying the myth that corporations are benevolent job creators who deserve special treatment. Nike isn't your friend. They're a profit-maximizing machine. And until we treat them that way, the exploitation will continue. The next time you see the swoosh, remember, you're not just looking at a logo. You're looking at a monument to a system that prioritizes shareholder wealth over social responsibility. A system where billion-dollar corporations pay less in taxes than the people who buy their products. Nike tells you to just do it, but what they're really doing is just dodging it. Dodging taxes, dodging responsibility, dodging accountability. And the only way to stop them is to demand better from corporations, from politicians, from the system itself. Subscribe to Wealth Decoded, because the truth about corporate greed isn't hidden in boardrooms, it's hidden in tax havens, and we're going to expose every single one.